We are going to right away jump into the panel discussion and development opportunities sharing. And for that, we have two panelists. We have Mumo Kainga, who's a development director for Mivida Homes, which Anne briefly introduced earlier. So he has 8 years of real estate experience, and he has been, prior to his position at Mivida Homes, he has actually have had some background in architectural firm, and he actually has spearheaded projects that have won awards in the residential and hospitality sector. This is from the Kenya side. On the Nigeria side, we have Mr. Tola Akinsulire, who is a global real estate executive, commercial strategist with over 2 decades of leadership experience across Africa and Europe. Before his current role as Mixta, he was a managing director, still for Mixta, but covering the Africa operation in Senegal and Cote d'Ivoire. So without further ado, Anne, I'm going to hand over the floor to you to moderate this panel session. Anne, over to you.
Thank you so much, Jeanette. Pastor Mate, really, really sorry. I think we are so passionate about this space of real estate. When we go in, we just talk. And I know our panelists have mentioned, like we just for us to kindly note that there are a few hard stops around the presentation. So what I'll do is I'm going to request my panelists, and that, thank you, I can see Tola is on. I'm going to request Mumo. I know you've mentioned that we might see you drop off after some time with regards to the camera. So what we do is you're totally okay to show face or not show face. We just really appreciate your being here with us. I'm just gonna go straight right into our questions for this afternoon, evening. Maybe just to get a feel of when you speak about building, it's been said over and over. What exactly does it mean as the two different economies, and what exactly does it entail? I think I'll start with you, Mumo, if you don't mind. Just tell us more, maybe what you can do. Really sorry, but we want to hear your voice.
So you can maybe give a quick introduction of yourself. I know you said a bit, but in 1 minute, who are you, who is the leader, before we jump into that question of what exactly is green development. Thanks, Mumo.
Thank you, Anne. And, I think this is a good opportunity that you've been able to offer both myself and Tola. And, I'll just start with a brief introduction of myself. My name is Mumo Kianga. I am the development director for Mivida Homes. Mivida Homes is primarily a residential developer based in Nairobi. We are have been in the market since 2018, funded and shareholded by two economic or real estate giants in their own right. One of them is Actis, who are primarily a private equity fund, and they invest in energy infrastructure and real estate across Africa and in a lot of emerging markets, including Asia and South America. The second shareholder is a company called Shapoorji Pallonji, who are based out of India, and they are primarily a construction company that now has a lot of interest in residential real estate development in Mumbai and in other parts of India. And the two companies bring together that different mix of experience and expertise. Actis, primarily being private equity fund managers, are our main capital providers, and Shapoorji being the technical operational partner, given their background and history in construction. They are a 150-year-old company that is started as a construction company and are now developers. So the two of them came together in 2018 to form Mivida Homes, and our mandate was at the time to develop up to 5,000 plus residential units in Nairobi. So far, we've been able to deliver and are in the process of delivering 1,300 of those units, some of which are under construction, and have a strong pipeline of over 5,000 units. So in total, we're looking at 6,000 plus. So we've been able to overshoot our mandate. And my role principally is to structure new projects, get them off the ground, and I'm in charge of the company's growth. And that includes also looking for potential partnerships where we can sort of leverage on the key company metrics, that is, push revenue and reduce costs, whilst at the same time building towards our sustainability goals. So this session is a welcome one, a topical one as well. And yeah, I hand it back to you, Anne.
Thanks, Mo. I think I'm going to give Tola a few minutes also. Please introduce yourself. Who are you? Who is Mixter? So that we can also get to hear your voice and just know what's happening on your side.
Okay, thank you very much. Mixed Africa is a real estate and infrastructure development firm. Our headquarters is based in Nigeria. We have over 20 years development experience, and our development spans across countries like Cote d'Ivoire, Senegal, Morocco, Tunisia. We have development experience in Egypt, Mauritania. In terms of development history so far, cumulatively over our 20 years experience, we've developed about 24,000 units spread across the different entities where we operate. In terms of ownership structure, we are largely owned by AR Asset and Resource Management Company, ARM. It's one of the largest non-bank financial and asset management institutions in West Africa. In terms of our strategy, our focus is to develop housing across the total segment of the housing market, but our focus primarily is in affordable housing. And one of the things which we've done over the years is to partner with a number of the governments where we work with to be able to develop affordable housing initiatives that would really drive the industry. For us, we believe beyond just being a solo player that delivers in terms of what it is that they do, we also like to see ourselves as enablers in terms of being able to achieve the significant housing gap deficit that you have across the African landscape. In terms of my day job is basically focused on growing revenue and looking for opportunities to be able to partner with institutions like the ones which you're looking at bringing in from Singapore. Because for us, beyond just growing revenue, we're looking at being able to optimize the landscape which we find ourselves playing in terms of being able to change the language within the industry that we find ourselves in. And I'm really, really appreciative of the opportunity we have to be able to explore opportunities in terms of what we can do with the Singapore business, the business entities. In terms of our operations in Nigeria, Nigeria is actually where we have one of our largest operations within the Mixta Group. We have a significant land bank of over about 1,500 hectares of development, whereby we're building a comprehensive live, work, play environment. I hope I'll get the opportunity to tell you a bit more in terms of some of the things we've done within that space, because within that space we've created residential, hospitality, and we're going into commercial within that particular location. Thank you very much.
Thanks, Tola. Maybe even before we move on to going back to Momo, maybe from your point of view, when you speak about the different regions that you are already developing in, what exactly is appreciated as green development? What does that mean? What does it entail?
Well, green development is basically your ability to introduce sustainable practices into your development process as against the traditional development process that we're familiar with. And one thing I will tell you here is this: beyond just the sustainability goals of you're trying to be a lot more conservative in terms of how your impact on the environment, there are actually stronger considerations for you to be for developers to actually adopt sustainability practices. For example, within Nigeria, we've seen significant rise in utility cost, in energy bills, in even cost of providing backup power. And so as a developer, it becomes very important that you have to focus on your total cost of ownership for the developments that you are providing to your clients. And so that's one of the reasons why you find that look, beyond just the drive to create sustainability developments that beat the natural balance on the environment, there's also the more commercial interest of wanting to provide developments that reduce the overall total cost of ownership in terms of energy management, water conservation, And the likes of all those sort of things, you need to be able to incorporate that into your development. So when we look at green development, those are the sort of things that we are considering at this particular point in time.
Thanks, Tola. Momo, is that the same we see on East Africa side, or Kenya side?
Yeah, 100%. And that's the focus for Mivida Homes as well. It's twofold. It's from a design perspective, construction perspective, and also when it comes to the operational management of completed projects, we look at the entire life cycle of a building to make sure that we are developing in a sustainable way. Obviously, the main benefit is the climate, but at some point it has to also be beneficial to the end user. Otherwise, it becomes one of those things that you do just to tick the box, and the end user may not actually appreciate it as much, and which is the total cost of ownership that I believe my colleague Tola was mentioning. And in a way, it's the same in Nairobi, right? On top of being able to drive down the impact of real estate on the climate, you also want to provide benefits to the end user, and which is why you have to look at it holistically through the whole project life cycle. So from a design perspective, what kind of architectural interventions are you introducing to your projects to make sure that they are fit for purpose from a sustainability perspective? In construction, what kind of materials and specifications are you providing in those buildings and projects? And from an operational perspective, how are you able to demonstrate that all the interventions that have come in from a design perspective, construction, are actually beneficial to the end user? And we've seen that where you're able to show that and demonstrate that across the project lifecycle, then end users are more than willing to participate, which means that from a developer's perspective, if the end user is appreciative of the benefits that come from this, then you're able to actually create your own market and your own demand, because then they are constantly looking for that, and that supports the kind of investment that we try to push on our projects. It is also, one of the things that our shareholders have sort of mandated us as Mivida Homes to develop. So all our projects are certified green historically and even into the future. We've done a 47-acre master planned sort of residential, retail, commercial, mixed-use scheme in Nairobi, and we're proud to say that all of the assets that have been completed to date are certified green, and some of them, and in most of them, we're able to demonstrate the impact of those interventions to the end users. And so that's the holistic approach that is needed.
Thanks, Momo. Can I ask, on generally, are we seeing the green development being embraced by developers on the ground? Who are these? Are we seeing that being a new trend? Like the way Mivida has said, this is what we want to do. Are other developers taking a similar thought process?
100%. I'll just say that probably the speed of adoption of green certification isn't, in Nairobi at least, as fast as you'd expect. But the developers who, especially those who are institutional in nature, and there are few of those in Nairobi, so ourselves and others that I saw in the slide, you had reference to Acorn, Centum, etc. And those are institutional players, and they have institutional capital. And they are responsible, same as we are, in terms of how we adopt the green strategies. So it's a trend that's picking up, I'll say, and a lot of the reason for that, especially on the residential side, is majority of the stock or inventory, residential inventory in Nairobi, historically has been developed and built by mom and pop developers. So that's you and me, owning a half-acre parcel of land and putting up, 100 units on this. And, our concern is not really what happens to the environment. It's primarily driven by the financial, aspects of real estate. But with institutional capital, it's more than just the financial implications. It's also what impacts are we having in the community and in the environment. And a lot more of that kind of capital is flowing into the country, and that is driving this adoption of green standards across the real estate market.
Oh, that's nice to know. But what standards are guiding, like what standards guide you? I know you're very strong on, like, let's say IFC Edge. Is that enough to guide, or are there other standards that you have to use to determine that, yeah, this is meeting the end that you're hoping to meet?
I think we've tried other certification sort of regulations and companies, for example, Green Star Lead as well. IFC Edge is unique in its ability to align itself to the local environments, the local climates that your development will sit in. So whether it's a building in Pakistan or in South America or in Africa, you can imagine that the climates are very different across these different regions. And it's very difficult for a lot of the existing green certification tools to offer that kind of flexibility. And we found that IFC Edge does offer you that flexibility because it takes a baseline, a benchmark on the local environment and locally, and importantly, locally available materials that are used during construction to create what they term as a reduction of either whether it's water or energy or embodied materials. And based on that, you get a rating on how well you're performing. Now, this is why it's a lot easier to use IFC Edge, and that's what we've implemented so far in a lot of the projects that have been completed in the past 3 years, and a lot of the projects that we are currently constructing and are in the pipeline.
Okay, thanks, Momo. Maybe on Tala side, what's the embrace like? Is the region embracing? Are we seeing many developers, running this course, or how is it like on West Africa side?
Okay, I think the story is a little bit different in Nigeria, and that's largely in part due to the fact that a lot of the capital for developments is not institutional capital. Most of the capital is still within the local economy, and so as a result of that, you find very few institutions are actually taking the lead in terms of introducing green developments. For example, like the slide which Jeanette had presented in terms of showing some of the examples. Those are some of the very few examples, like African Capital Alliance, Alpha Meet, EcoHost. Those are very, very few, and also ourselves. So generally, you find that in terms of adoption, and you also have to look at it on two sides. You have a huge housing deficit. At the moment, you have about 28 million housing deficit units. And so the first thing that comes to the mind of any developer is that, let me just get inventory out because there's a market that is going to be able to take that inventory. Thinking green is not the first thing at the back of their minds. But for institutions like ours who have, as it were, a longer focus in terms of the direction which we want to move our business, in terms of the sort of funding that we're looking at raising in the future, and in terms of how we want to position ourselves as an institution, it's institutions like that that start taking consideration in terms of introducing green building. Even before the introduction of certifications like the IFC Edge, in terms of our approach to development has always been to develop develop residencies that are eco-friendly in terms of having significant green spaces, having significant areas whereby you are reduced the impact of densification within each particular land spaces. So what I would tell you, within the Nigerian space, the adoption of green technologies in terms of green certification is still very sparse. And if I were to say it, only very few institutions who have decided to position themselves in terms of branding and at the same time positioning themselves for future opportunities of being able to raise future capital outside of the economy are adopting this green certification.
Thanks, Tola. So then in that economy, then we can start speaking about that there's competition. Is there would you say there's been competition as we grow within the green development space, or because of the sparse developments, it's still a huge pie that, many have space to come?
Oh, you see, the way I see it is that, look, there's huge opportunity for the green development, and the most important thing is being able to position it as a benefit provider. So, for example, when we introduced our conversation at the beginning in terms of what green development means to us, beyond just the strategy of saying you want to protect the climate, you want to protect the environment, we also look at it from the perspective of, look, what is the overall cost the cost impact that it's going to have on your development. And that's one of the, I mean, that's what future developers are thinking, and future minded developers are thinking along the lines of that. Look, it's beyond just even climate. It makes commercial sense in terms of how you even deliver the project, how you develop the project. Because if you're able to introduce green strategies, even in terms of your construction, you're able to reduce your cost of construction, and beyond reducing the cost of your construction, even the cost of ownership that you're transferring to the buyers who are going to be running those utilities, you also significantly reduce it. So for me, it's really a case of being able to position it that, look, this has current benefits for you as a developer, and it also has significant value positioning for your customers. By the time they are coming into these particular residences, these properties that you're delivering, the cost of ownership over the life cycle of the property that you're delivering is significantly lower than developments that are built using your traditional development, whereby you're delivering power using your traditional supply method of having backup generators, which have to be supplied using your diesel power generators and the likes.
Okay. Thanks, Tola. Maybe I'll go to Momo and ask. I know you already mentioned a bit of what's happening on the Mivida side, but I just wanted you to maybe speak a bit more on the projects that you have on the ground, and even speak to the opportunities that you see where we can have our, what opportunities are there, even if you look at the project on the ground.
Thanks for that, Anne. So, I mean, currently we are building 1,500 units on a 7.5 acre parcel. This is a affordable residential scheme, mostly studio 1 and 2 bedroom units that are targeting the sort of working class, first time owners, young families, as a market that we are sort of developing this for. And the significant shortage for, I'd say, what I'd call dignified housing within that market. And when we talk dignified housing, I'm speaking of, just the look and feel of a space, the design, the type of amenities that are provided, the green spaces, the natural light in all the rooms, ventilation as well, the quality of the finishes, the quality of the construction. And that's something that Mivida prides itself with, is the ability to, at an affordable level, still provide a level of finishes, a level of quality, a level of design and a level of amenities that within that segment have not been provided previously by sort of the local developers. We also have a 640 unit development within the Garden City mixed-use scheme, and an additional 430 units that we're also doing that are sort of mid-market. The 640 is still affordable. Across these different segments, you'll find a recurring theme, which is what I mentioned, right? The quality of construction, quality of finishes, and amenities, all of which lend itself to the sort of overall advantages of buying into Mivida. And this is the pitch to our investors and our buyers and our residents, which has resonated with them to the extent that we're now able to sell quite quickly in a market that has been, since post-COVID, sort of growing back to its pre-COVID status. And, that success, a lot of it is attributed to the brand, but also those 3 particular items that I mentioned. And we see opportunities for partnering with enterprises in Singapore and other parts of this world in providing, the best quality finishes that we can within that particular type of market segment that remains affordable. The product has to still remain affordable to the end user. And even if we're able to demonstrate that sort of the green initiatives and green interventions that we are incorporating in the project do provide some kind of financial benefit in the long run during the operational side of these projects, at the end of the day, it still remains a very cost-sensitive market, especially when you're in an affordable residential segment. And the challenge, and I saw a question posed in the Q&A sort of notes that we have access to as panelists, is how do you bridge the gap of providing green interventions and affordability. One of the ways that I've seen that has worked is very early on discussing procurement. And because we're talking scale, number of units, we're talking, hopefully what we can leverage is the economies of that scale and discuss large volumes of procurement. Now, it's not very easy when we're talking shipping materials from other parts of the world, but it's something that we do. Generally, we import a lot from India, we import a lot from China, to make sure that we can get good quality materials at a rate that is affordable to our end users, and that is the target. So it's something that we can explore, right? It's something that is always an opportunity where we can leverage the economies of scale, the ability to discuss in forums such as these with Singaporean manufacturers, suppliers of construction materials. One thing I've seen work very easily in the project we did at Garden City, where we developed a 30,000 square meter sort of net sellable area mall, retail mall, which in Nairobi terms is quite large, and we provided a solar panel PV roof that covers the carport, right? And that was an expensive endeavor. What we did was work with an institution that then amortized that capital cost over a 12-year period, which allowed us as the developer to reduce the upfront payment and spread it over that 12-month period, which was perfect, right? And to the extent that we can partner with institutions, whether it's financial, whether it's suppliers, or bring them together and have that kind of approach, then we are able to reduce that initial cost outlay, which, as you know, can have a big impact on the eventual cost of the product. And so those are some of the opportunities. Obviously, we are positioning ourselves as well to launch a green D-REIT in the market. And that provides an opportunity as well for financial institutions that are not locally based and looking for access to the real estate market in Africa, with a sort of credible partner such as Mvida Homes, and access to sort of returns that are adjusted for the green and impact-based nature of our development work. And again, that's another opportunity, right, for both receiving a financial benefit and also having an impact in the residential scheme. I think something that Tola has said, that which I agree with, is the scale of the demand in residential development is huge. In Nairobi, it's 2 million houses a year. Sorry, that's like the built-up inventory that is lacking in supply, and every year we add on 250,000 homes. Competition is increasing. You have a lot more developers that are coming into the party to try and eat into that demand. And what will really stick out for any developer is the kind of products you bring into the market, whether it's smart home automation, whether it's the green interventions, whether it's, that kind of discussion becomes then what can pull you apart from the rest of the developers. And so partnering with other institutions can be helpful in that regard. Thank you.
Thanks, Momo. Maybe that's then crossing over to Chola, just a feel of what's happening on the ground. And even as you speak to that, you also just manage the time, you can also now speak granular to then where do you see those opportunities for our attendees who are here with us.
Okay. I like very much what Momo had said in terms of, look, as a developer, one of the things that is going to differentiate you is really in terms of the quality you bring to your development, in terms of not only the development itself, but also the supporting infrastructure, the environment in which you create within the space of your development. In terms of what we are currently doing on the green space, we have a 984 unit development, which is an affordable housing project. It's Marula Park, which we've already received preliminary EDGE certification on it. And the plan in terms of part of the strategy for energy efficiency for the development is to install an 800 kilowatt solar powered energy generation, apart from different water conservation strategies that we have for the development. As I mentioned earlier in my introduction, we have a 1,560 land bank, which we have master planned, and within that land bank, we're developing different residential developments. The development I just told you about, the Marula Park, the 984 unit development, is an affordable housing development. And the way in which we're even selling it is we've also tried to be a bit more innovative in terms of the approach of uh, commercializing it. So within that development, we are using a rent to own approach to sell some of the units, and then you have your traditional instrumental payments, which may go over 24 months, depending on that. And at the same time, we're also selling using mortgages. So one of the things I always tell people when people talk in terms of affordability, and my own definition of affordability, really, I look at it from the perspective of how much does the buyer really have to invest to buy that property. And what mortgages helps you to do is it helps you to be able to spread the cost of acquisition over a longer period. And using these three strategies, we've been able to at least address that affordability gap, especially for affordable housing. But that's not the only thing we're doing within that our land bank. You have our premium developments. We have different premium developments that we're doing within that particular space. But beyond just what it is that we're doing, I think I would like to interest the rest of the Singaporean businesses that look. As I've mentioned, there's this huge housing deficit within Nigeria of about 28 million housing units. Now, I'm privy to ongoing conversations within the government in terms of a new initiative that is going to be launched within the next couple of months, which the overall philosophy for that initiative is that, look, you want to convert Nigeria to a construction site whereby you are delivering as much as 1 million, I repeat it again, you're delivering as much as 1 million housing units annually, because the overall philosophy for the government is that they want to significantly address the housing gap. Now, I see that as a huge opportunity for anybody who would like to position their business in addressing the housing needs which you have within the economy. I see that as a huge opportunity in terms of being able to take positions and actually being able to address some of the gaps that exist within the space. And as I've said, it's very, very much important that as a developer, you position yourself with a unique proposition. Beyond just the strategy of delivering quality infrastructure, delivering quality housing units, green certification also represents a way in which you can position yourself, because you'll be able to deliver at a quality that ensures that the total cost of ownership for the eventual owners as they're taking over the property over the life cycle of the property is significantly lower than the rest of everybody. So I see significant opportunities beyond what it is that we are doing, which, as I've mentioned, we're doing it within our land bank, but there's even opportunities within the overall market space of the housing, the housing industry in Nigeria, based on what the government plans to do over the next few months. And I can tell you this, the initiative is going to be driven primarily like private sector capital. So I know the typical thing that everybody thinks about when you're talking about the government initiative, that look, how is the government going to fund that? I'm not going to go into details, but what I can tell you is that it's going to be funded largely by private sector capital. And you know, with private sector capital comes a lot more efficiency. You are sure that, look, whatever private sector capital puts into a project, at least up to 90% of that actually goes towards development, as against the typical practice of if it is government capital, you know, by the time you factor in all the bureaucracies, give or take, you may be only getting 50 to 60% of that capital going towards development. So there's a huge opportunity that I would say exists within Nigeria for anybody who wants to position himself or any business that wants to take advantage of those opportunities.
Thanks a lot for that response. I must mention, as I just want yourselves as well as Mumo, Chola yourself as well as Mumo, to just know, as we talk right now, we have a whole team of companies across the entire value chain. We have architects, interior design, building technology companies, companies that do furnishing, prop tech, hospitality operators. I just want to give you one last moment just to give any general comment to this team of ours, even as we go into the Q&A session, because I know we've really eaten into your time. Just one comment to our team of Singapore companies. We really appreciate having taken time to come and join us. Tola, you want to go first?
Sure, I can go first. I think the only thing I would just add to everything I've said is that, look, there's significant opportunities within the African market, and I would say specifically in Nigeria, there's significant opportunities. And the typical challenges that you have in Africa, I would tell you those are commentaries. In terms of being able to come and actually play within the market, you would find significant opportunity to have a huge return on your capital, huge return in terms of what it is that you put into the economy, in terms of what you invest in it. And what I want you to look at it is that look at it as you're coming into a partnership. Whatever it is that you're coming, for example, if you come into Nigeria, whoever it is you want to work with, whatever businesses you want to work with, look at it that you're coming to do a partnership for the long haul. Once you have that sort of vision, that sort of perspective in terms of how you want to play within the market space, I'll tell you there's significant opportunities for your business to grow within Nigeria. Thank you very much.
Thanks, Tola. Anything from your side?
I think I'd just like to echo what Tola has mentioned. There's opportunities in Africa generally. I think when you look at from a design, like I mentioned, the life cycle or development starts off with design, and in there are opportunities for architects, interior designers, structural engineers. We are working very heavily with Indian architects at the moment as a company, and Indian structural engineers who are able to bring some of that global experience, and then we package it for the local market and provide a product that is differentiated. We are also working with a lot of construction material suppliers, manufacturers from Egypt, China, India. And so there's opportunity there as well. From an operational perspective, one of the things I've seen is a lot of these branded sort of residential short-term, medium-term companies entering the market to take on the business hotel industry in Nairobi. And those who have done that have been successful. So I think opportunities exist. It's all a matter of finding the right partner and finding the right niche. And, I think that once we're able to have that kind of discussion, then we can assist each other in both of achieving the goals that we're striving out to achieve. The opportunities are significant.
Thanks, Momo. Thanks, Tola, so much for the insights you shared. I think we'll give it a few minutes for Q&A. I'll pick, there's one that I've seen from Maria that was asking about the difference in the 10 million deficit. One number is 10 million, the other is 28 million. Allow me to confirm, East Africa is the one that has above 10 million houses deficit. Nigeria, as Tola has mentioned, is 28 million, the accumulated need, and then I know it grows annually. So I think just to clarify around the numbers, I know you've had a number of, many numbers being thrown. The point is there's a huge deficit in our region, and that's one area most governments are looking to fill, and they're looking for partners who can be able to help bring in, inputs across the journey that can help that accelerated development. Allow me to read. I can see one more from Ali Reza. What drives the need for new materials and technology for new projects? For parts that have been answered, I'm just going to say, like, for example, on the needs one, I think both Tola and Momo have mentioned what is driving the needs. Maybe, I don't know if you have something to say on the local laws in terms of circular construction and green materials and green construction. Is there something different on Nigeria's side? Is there something different on Kenya's side? So maybe just respond to that. I think I'll ask, I don't know, I think has Momo, I know Momo had said he had a crazy hard stop. So I'll start with you so that as soon as we're able, we can actually release you.
Thank you so much, Anne, and I appreciate that. I'd say, new materials and technologies, to the extent that it's affordable. I know, in some parts of the world, timber is used for construction, bamboo materials as well. In Nairobi, we are yet to embrace that primarily because of the cost factor, but I know there's a big push to sort of understand how that can be beneficial in the market. The local laws, generally, when local infrastructure does not keep up with the pace of development, introduction of new technologies, what it doesn't mean is that there is barriers. There are no barriers. It means that, we're still able. I've seen a lot of new types of construction technologies introduced to the market, faster formwork, for example. I think there's an aluminum formwork that we've been trialing that comes out of Korea, for example, that will speed up the time taken to construct. There's and other types of technology such as those. So I think once we get an opportunity to discuss the nitty-gritties, I'm sure we'll find opportunities that can be beneficial. For a developer, I'd say the most important thing is cost, because why I'd say cost? Because at the end of the day, we are selling to an end user who has to be able to afford that product. And speed is also something else that we would factor in. So to the extent that you have those kind of materials that are available within your networks as a Singaporean supplier manufacturer, then we can always have a discussion around this. I'm hoping, and that's a sort of good answer to your question. Thank you.
Thanks, Mumo. Chola, anything you want to add?
Well, I think the only thing I would want to add, two things I'd like to add. Number one here is the long-term maintenance of those sort of prefab materials. So let me give an example. You've had, for example, in Nigeria in the past, you've actually had developers who have tried to introduce prefab materials to speed up construction process. Now, the concern for most people for most of the buyers is that, look, if these materials are imported, if I have, by the time I take over the product, about the unit, and I have to do maintenance, etc. and things like that, means I have to basically wait until something has to be shipped from abroad, however long it might take, etc. and things like that. So the way I always look at it is that, look, as a supplier, you need to also plan to have some measure of local inventory on ground, so that if you have those sort of repeat maintenance requests or whatever, for whatever reason, those things can be quickly addressed. That's number one. Number two thing also has to do with the ability of the buyers to pay. Now, it's interesting what you just said, the speed of course, everybody talks about speed when it comes to deploying this. And I remember one of the things, the way I always respond to this question is that, look, if I complete a construction cycle in 6 months, are my buyers going to pay me in 6 months? If my buyers are not going to pay me in 6 months, why do I need to invest the cost of rolling out in 6 months if the people who are going to exit me are not able to pay in 6 months? And that's the reason why things like mortgages are strong drivers for significant adoption of those sort of prefab technologies. Because, for example, within the Nigeria, there are opportunities in which you can look at how that thing can be structured. It's just a way of structuring. So, for example, if you want to use a prefab technology that is going to allow 6 months and up to 6 months, speed up delivery within 6 months, you need to make sure that that sort of delivery process does not come until the tail end of the payment cycle by the buyer. And so that means there has to be a way in which, as a developer, you have to manage the buyer over that period. Because there's no use for you as a developer to deliver a product in 6 months and the buyer still needs an additional 12 months to complete payment. And so it's just a way of how you're going to structure the development cycle and how you're going to manage the buyers in terms of, okay, this is what you should expect by month 6, this is what you should expect by month 12, and it's only by month 18 that you'd actually see your property. So those are things which, as Momo was saying, it's all a case of when we start the conversation, the developer will be able to incorporate, okay, this is the local customer expectation, this is how we can factor it into our conversation and negotiation in terms of how we want to roll out and develop those sort of inventory.
Thanks, Mumo. I see 2 more questions. There's one from Jalad Sharma, and the question is about industrial warehouse. I know Mumo, Chola, as we talk, is more on the residential side, to the extent that you can speak to it. So the question is, this is from Nova Build. How's the market for industrial warehouse? Because the point is sorry, I seem to be missing a bit of that. Oil and gas structures, pre-engineered concept can offer 30% lighter solutions. So the question is, what's the space like for industrial warehouse, and can it be able to absorb this kind of pre-engineered concepts? The reason I'm mentioning to the two of you is because I know you've not only just been in what you are, you have had journeys within the larger built environment space. So to the extent you can speak to it, please do share your insights around it.
Interesting. You said, what's the market for industrial warehouses? We that's actually something that we are looking at working on within our. Like I said, we have a 1,560 hectare land bank, and the strategy for it is to have a live, work, play environment. And the next initiative that we're actually working on is having sort of like your commercial space where you're going to have companies to be able to display some of their products, etc., like warehouse arrangement. So, how's the market for industrial warehouses? Yes, the market is you're having that market is coming on swing. Like I said, for example, we have something that we are trying to do. So there is a market for it. It's finding the right developer that you can partner with to do that sort of product with. So like I mentioned, it's something which we are looking at. So yeah, we might probably be able to have conversations with Jalaj Engineering when they are in town to see what sorry Nova Buildings, you understand, to see what sort of opportunities exist that we can do in terms of delivering this sort of project that we're looking at.
Thanks, Lola. I must mention, Mo had mentioned he had a hard stop and it's hard to drop off, but it's quite timely because we've actually pretty much spoken to, I'd say in the interest of time, any other questions that might be out there, please feel free to reach out to ourselves, Jeanette and myself. We'll be able to connect you to Tola, to Mumo, because these are already, I must mention that even as I pass over the session now to Jeanette, she'll take us through the mission. And actually, in both markets, these are some of the companies that will be looking to expose our Singapore companies to. So at this point, just a big appreciation to you, Tola. Really appreciate the insights you shared with us, the answering the questions that we've had, and looking forward to just walking that journey with our Singapore companies in case they have any clarifications, and even as we walk towards the targeted mission. So Jeanette, please allow me to pass the stage over to you. Thanks so much, Tola. I must mention at this point, even you, Tola, if you're not, I put it this way, you're open to exit. You're open to exit even after you've shared all the insights you've had. Thank you so much.
Thank you very much, everyone. I look forward to engaging with everybody later on. Thank you. Bye.
Thank you.